Hello everyone, welcome to the Kai's Family Services May Update. We do hope you guys had a great Easter or Passover with your families, and we're looking forward to a strong May. In the meantime, here are some quick updates from our FOS leaders.
Hi, Craig Garcia with Capital Partners Mortgage. This month I wanted to talk to you about FHA loans. It's two recent changes by FHA. One, FHA said, hey, if your credit score is less than a 620 and your debt to income ratio is over a 43% DTI, that your loan now needs to be manually underwritten. Basically, it means that if you have a DU approval, which most of the time that's the starting point for a loan, then that's usually good enough, but not if you have this combination of lower credit score and higher debt to income ratio. If you fall into that bucket, now your loan has to be manually underwritten. A live underwriter has to justify making the loan for you. And it's going to be difficult for them to do so considering the low credit score and the high debt to income ratio. This is going to result in some people now not qualifying for an FHA loan. And so it is an impactful thing. The good news is that most of the borrowers that are out there that have been pre-approved for FHA loans don't fall into that bucket. So if they do, they might have to work on their credit. They might have to look at paying some debt off in order to qualify. It doesn't mean that they're out of the market, but it could delay their purchase. So that was one news. The other news was that FHA last week said that if you're doing a down payment assistance loan with a governmental agency funding the down payment for the buyer, and you're doing an FHA first mortgage, now they require a lot more documentation from the governmental agency. And it caused a lot of turmoil in the industry. There are some lenders who've said, hey, we're not going to do any down payment assistance loans now if it's an FHA first mortgage. We still are offering the program. We're monitoring the situation carefully. But you might have somebody who says, hey, I was approved for a down payment assistance loan with an FHA loan, but now my lender says I can't do it. It could happen. If so, give us a call. We'd love to help. And we'll talk to you next month. Have a great day.
Hello, I want to talk to you today about a question that's facing more and more of your clients on a daily basis. Should I go with an admitted homeowners carrier or a non-admitted homeowners carrier? I want to draw a quick distinction of the differences. On an admitted carrier, really what that's saying is that they've submitted forms, rates, filings to the state of Florida, and they must uphold all the rules and regulations with the Department of Insurance in each particular state. One of the top selling points for an admitted carrier is that they're backed up by the state guarantee fund. That is something that they pay into themselves, and also they receive the backing for it, which sometimes can affect their rating. A non-admitted carrier does not necessarily have to live up to the rules and the regulations of the state. Therefore, they can sometimes design policies that have maybe higher risk to them, or they can be very competitive on one certain type of policy if it's what they're looking for to grow their overall business. The biggest thing, and what we hear the most, is the issue with the guarantee fund. If a non-admitted carrier were to go insolvent, how would I receive my money back? Unfortunately, even with an admitted carrier, you're not necessarily going to get all your money back in the case that an insurance carrier goes insolvent. So, what we have decided and what we think is the best advice that you can give your clients is to focus on the financial rating of the carrier. It's much more important than whether if it's non-admitted or an admitted carrier. Thank you very much.
Hello there. When it comes to the execution of a contract, one of the most important items is to keep your client's money safe. Did you know that many buyers lose their escrow deposit because they did not track and follow the requirements of the sales contract? That's right. Mortgage contingencies do not automatically mean that if the buyer fails to obtain financing, they receive a return of the deposit. The FAR bar contract requires both application and diligence on the part of the buyer. The contract also requires that the buyer notify the seller prior to the loan approval due date if they have not been able to secure the financing. This is the window for either requesting termination and a return of the deposit or requesting an extension of the loan approval due date. If the due date for the loan approval comes and goes and the buyer fails to notify the seller, the contract treats that lack of action as moving forward toward closing. Then, if the closing does not occur on the contract closing date, the deposit may be forfeited. Another important feature of this provision is, should the buyer fail to notify the seller as required, then for 3 days after the loan approval due date, the seller may elect to terminate the contract. Why would they do that? The seller may want to sell to another buyer for more money or perhaps even to a cash buyer. It is important to provide these guidelines to the buyers and sellers so that they know their rights and responsibilities under the contract. All of this can be found in paragraph 8B of the FAR contract. This provision is also so important it should be reviewed on a regular basis. Home Partners Title and our attorney Rose Sheehan provide contract training regularly. Be sure to inquire about the next one in your area. I'm Marlene Rodriguez. Thank you so much for watching, and I'll see you next time.
Hi, Benjamin Jean with Kai's Property Management. Here to clarify a few things about myrentalscreening.com reports. You will notice that if a tenant is declined for credit or criminal reasons, you will get an adverse action letter sent to you generated by our system. Now, by law, the only reason you have to put in writing that you're declining a tenant is for credit reasons. We do provide this adverse action letter to you, but I would caution you not to send it to an agent if you are representing the tenant. This is simply for you if you are representing the owner and you need to decline somebody for credit reasons. Now, the other thing to note is that beginning in May, our reports will be changing a little bit. We will send out an email detailing the changes. Suffice it to say that we've listened to what you have said, and we've made some changes to make it better for you. Have a wonderful month, and we look forward to seeing you.
Thank you to our leaders for the great updates. Now just a quick reminder for you guys. Remember, we're here for you as a partner and as a resource. So whether we're working on the deal or not, we're here to help you succeed as much as possible. Now let's go make it a great May, and we will see you guys next month.